So I wanted to thank everybody for coming. This is our first network meeting that we have put together, and it's hosted by Dor Couture and also BrideBabe magazine, which I know a lot of you have met Claudia as well. So I want to introduce our guest speaker. Her name is Lynn Pernille, and she is a wedding photographer, videographer, and educator. And so she has many things to share, and she'll also go over where she offers the classes that she does, okay?
Yeah.
And thank you for coming and welcome.
You're welcome. Yeah, thanks everyone for having me. So I don't know if everyone got the memo, but today we're gonna be talking about taxes. I will try to make it less intimidating and easy to understand. But like she said, my name is Lynn Pernille. I live in Peekskill, New York, so northwest Westchester County, but I shoot all over the tri-state, so North Jersey, New York, Connecticut, basically everywhere. I'm a photographer and videographer, and I'm also an educator. I teach mostly about photography and business strategy, so all the nitty-gritty business stuff, and then some technical photography stuff. So how many of you guys would actually consider yourself numbers people? Like, do you like numbers, like math? Cool, awesome.
I'm not gonna go in my pocket.
Yes, that's funny. Yeah, so I feel like the three of us are kind of the anomalies that are both left and right brained. Most people are one or the other. So I think a lot of us are creative, right? Most of us are wedding industry creatives, right? Yeah, some type of creative field. So you don't have to fully understand numbers and math and taxes. So even if you outsource it to a bookkeeper or an accountant, I think it's always good to have a good overview about what they are, what they mean, so you can oversee it well and be a good CEO for your company. So before we dive into taxes, let's quickly just go over the main business structures, because that actually does come into play with taxes. So how many of you are sole proprietors? Cool. Okay, a bunch of you, nice. And LLCs? Okay, most. Any of you LLCs taxed as an S Corp? If you even know what that means? Cool.
One of them.
Cool. And are any of you a corporation? Okay, cool. So most of us, it's funny, it's perfect that most of us are here because these are taxed the same way. So that makes this conversation super easy. So a sole proprietor is what you are by default when you're an individual who runs a business. So a person making money, doing something, creating profit. An LLC is what you can choose to become when you incorporate your business. And the reason why we like to do this is because it creates a separate entity from you as a person. So when you're a sole proprietor, it's you as a person. So for me, it's Lynn Pernille Christensen. That's reliable for everything. When you create an LLC, you kind of put your business in a different bucket, separate from you. So the finances are in the separate bucket and all the liabilities are in a separate bucket. So if you were to get sued or get in trouble or owe something or have debts, it's only the business that is reliable for those. You as a person are completely separate. So if you were to get sued, they can only go after your business assets. So whatever's in your business bank account, your business equipment, they can't go after you, your home, your retirement accounts, nothing like that. So the main reason, the legal reason for being an LLC is for legal protection. So S Corps, I won't go into too much detail, but it's basically a tax saving strategy. So by default, when you're an LLC, you get taxed as a pass-through entity, which I'll explain in a little bit, which means that you're taxed off of your profit. If you get to be really big and profitable, that can kind of hurt you come tax season because you get charged self-employment tax. So by choosing to be an S Corp, you just fill out a form, say, I'd like to be taxed as an S Corp. You get the option to split up your profit into profit and wages. So it just makes your taxable amount smaller. But that's a whole nother topic for a whole nother day. I think the cutoff that accountants tell you is like anywhere from 50 to 75,000 to 100,000 profit is when you want to consider that. But it's not a black and white issue because there's a million different tax saving strategies. So instead of becoming an S Corp, you might, maximize your retirement. So it's never black and white when it comes to taxes. It's not like a number, a straight line. There's so much complex that goes into it. And then corporation, which I don't think any of us are, is kind of like an LLC with the S Corp. They're taxed the same. But the difference is that an LLC is owned by an individual and a corporation is owned by its shareholders. So when you hear of like public companies traded on the stock market, making your IPO, initial public offering, you're basically offering up to the public to own parts of your company. So I don't think any of us are, that's not our goal. Our goal is to make profits, not to be traded on the stock market. Okay, so like I mentioned, sole proprietors and LLCs are taxed as pass-through taxation, which means that when the IRS comes to get their money off your profits, it's done through your own personal tax return. So it's kind of filtered through you as a person. If you elect to be an S Corp or if you're a corporation, you have to do your own personal tax return and a corporate tax return. So it's a little more complicated, and I haven't crossed that bridge yet, so I can't even talk about that. So today we're going to be talking about the normal pass-through taxation. So like I said before, there's two reasons that you'd want to be an LLC, for the legal reason and the tax reason. So the legal definition of an LLC is a corporate structure whereby the members of the company cannot be held personally liable for the company's debts or liabilities. Like I said, you're protected under a corporate veil. So anything your business does is separate and covered, and you as a person are totally separate. And the tax reason is that it's a hybrid entity that combines the characteristics of a corporation and the tax benefits of a sole proprietorship. So like I said, that pass-through taxation. And like I said, if you're an LLC, you have to keep your personal and business money separate. It's not an option. Basically, if you kind of blend your finances, you put your business profit into your personal bank account, if you were to get sued and you were to claim, hey, I'm a limited liability corporation, they could, if the opposing lawyer found out that you did that, it's called piercing the corporate veil. It's kind of saying, it's disregarding the fact that you're supposed to be separate, and then they could say, nope, you lose your limited liability status, you do have to pay up from your personal. So super important. First thing you should do when you create an LLC is create a separate business bank account. There are a ton of options out there. There's no one bank that's better than the others. Basically, what you want to look at and consider is the minimum balance you have to have in there to avoid the monthly fee. Unfortunately, you don't get interest off of money in a business checking account, so you don't want to tie up a ton of your money in there. And you also don't want to lose money each month off those fees. So just figure out whichever one is best for you. And anytime you get cash payments, you have to physically go in person, so you would want it to be somewhere relatively close to you. But the nice thing is, most banks nowadays allow mobile deposits, where you just take a picture of your check and it's deposited. You don't need to go anywhere. And the extra added benefit is that you keep that for your own paper trail. So I love mobile deposits. All right, do any of you do your own bookkeeping? Do you know what bookkeeping is? Kind of familiar? Do you guys, the rest of you, outsource it, or? Yeah? Okay.
I do it.
Yeah, right. It's actually not that hard. So it sounds intimidating. First of all, does anyone know the definition? So the difference between bookkeeping and accounting.
Yeah.
You want to share what you think it is?
Well, bookkeeping, you're keeping the records
Yes.
of the transactions going back and forth.
Exactly.
And the accountant consolidates and breaks everything down, preparing you for taxes.
100%, yeah. So bookkeeping is literally keeping a record of your transactions. So money in, money out, income and expenses. And they do that to generate your profit or loss. And like she said, your bookkeeping records are what you pass over to your accountant or what you use to file your taxes. So like she said, bookkeeping is really not that hard. It's just tracking what comes in or out. And it might be different for different types of businesses, but for weddings, for me, it's fairly simple because I'm not buying tons of small inventory and selling like 20 items per day. It's just one wedding. This, so it's less quantity. So it's actually fairly easy to do. And what's nice about doing it yourself too is that you always have that information at your fingertips, and it can tell you so many things about how your business is doing. You can create charts, profit and loss statements. It really makes you an educated business owner to be able to look at your numbers. So there are tons of different programs you can use. I think the most common ones are probably QuickBooks or FreshBooks. I use GoDaddy bookkeeping, so it came free with my domain like years ago when I first got my website, and it was actually really user-friendly, really simple, really clean. On the dashboard, they show you visually your profit and loss, so you can really visualize your high seasons, low seasons. So basically what you do is you would link any financial account you have. So your business bank account, if you have any credit cards, PayPal, Venmo, Etsy, any system that you use to give or receive money, you just give it your login information, and that way anytime any money comes in or out, it automatically shows up in your program. So you don't need to manually write anything. So it makes it really user-friendly. It's kind of hard to forget anything because it's digital. It knows everything. So this is kind of what your income transactions would look like. It'll always know the date. So that's the date it received it, and then the dollar amount. It always knows that. Sometimes it'll know the name of the person or the vendor, but usually you have to clean it up, write who it was, and then give a description and then a category. So income categories are actually really simple. The IRS only cares about general income, and then there's like a subsection for 1099 income, which we'll talk about. But for my purposes, I like to make a subcategory for every type of service I offer. So weddings, engagements, proposals, portraits. And that's not really for the IRS. It's more for myself, so I can create charts like this, or I can visualize where my income's coming from. Kind of helps me decide what should I focus on, where should my marketing efforts go. But I have actually heard that the more specific you are on your tax return, the more optional subcategories you give, the less likely you are to get audited, because it looks super, trustworthy. It's very unsuspicious when you have everything, line items out. So it's not required, but I do recommend it. And then business expenses, it's almost the exact same thing. It knows the date, it knows the amount. You have to, usually knows the vendor as well, and you have to say the description and the category. So this, I would say, is the hardest part about bookkeeping, knowing how to categorize your expenses. So I have a little cheat sheet. I don't have one for everyone, but you can just pass it around and take a look. So it's a little bit difficult. Some of them are really obvious, like advertising. If you get business cards, that's an advertising expense. But some of them are a little more confusing, like the ones that I hear often are office expense versus supplies. Those sound super similar, right? Generally, the rule of thumb is it would go under the supplies section if it's something that you use day to day, a smaller ticket item, so not super expensive, basically the type of thing you'd find in a supply closet. So I think supply closet. And then office expense are typically like more substantial, maybe like office furniture, services, so like a subscription service, stuff like that. So the general rule of thumb, this is like the definition that the IRS gives about whether you're allowed to write something off as a business expense is, a self-employed business person may deduct any expense that's directly related to the business, ordinary and necessary, and not lavish or extravagant under the circumstances. So if you're a wedding photographer, it should be wedding photography related. You're not buying like sports equipment or something, totally unrelated. Has to be like, you can't be buying 10 cameras and saying it's all for your business unless your business really needs that. And another kind of good rule of thumb is whenever it's a gray area, ask yourself, could this item be used outside of my business? So for instance, I shoot a lot of weddings and I have these like black jumpsuits and cocktail dresses that I buy and I only wear for weddings. I've never worn it outside of a wedding, but because I could wear it day to day, I'm not allowed to write it off. But the one loophole to get around that is if it's embroidered with your logo or screen printed with your logo, it is a tax write-off because that's considered advertising. Because even if you did wear it outside of your business, it's like acting as an advertisement. So there's a lot of gray areas like that. If you have any questions about these weird ones, definitely ask an accountant. They'll be able to tell you better than me. But those are the general rules of thumb. So then the other one that's a little bit different is when it comes to your car expenses. There are two methods that you can use. So you can do the total cost of all of your gas throughout the year, all of your car maintenance, so oil changes, car washes, stuff like that, and then multiply it by the percentage of driving you did for business versus personal. Or what's easier and usually more cost effective, at least in our area of the country, is to take the IRS's standard mileage rate. So you still have to calculate your mileage and figure out which percentage was for business. But they just give you a flat rate. So this past year, 2019, it was, I think, 0.58 per mile, so 58 cents. I think next year it's going to be 0.575, so it changes every year. But basically you just take that rate and it usually works out to be, you get more of a write-off than if you were to do all of the math and everything. So it's easier and you get more deduction. But what you do want to also track separately is anything non-car but transportation related. So public transportation, if you take the train anywhere, Metro cards, Uber, Lyft, anything like that. And then your tolls for any business drives. So what I usually do is I print out my Easy Pass statement and my mileage records, and kind of if it was on a date where I drove for business, I count the tolls. So that's, I haven't found a really good system for that. I feel like there's got to be an app for it. But
there's a big envelope in the car. Not one thing's electronic, but.
Yeah. And then parking. So any parking meters you paid for a business event or parking garages at a wedding or something like that. There are apps, so there's a good app for tracking your mileage called Mile IQ. I used this years ago, but I lived in Jersey City at the time, and it basically automatically, because phones are smart and they have GPSs, they can tell anytime you move at a speed a car would move. But I would circle around looking for parking, and each time it would be like 3 trips in just that one lap, so I got really annoyed with it, just deleted it. Like I said, I'm kind of lucky with weddings. I'm not driving all day, every day, small trips. I'm driving like one wedding per weekend. Like it's less quantity and just like larger batches of driving. So it's not that much of a pain to just write it manually. But if you do drive a lot constantly, I recommend Mile IQ or looking into another app. Yeah.
Do these networking events count?
Absolutely. Anything business related. It can be a wedding, it can be driving to a print shop to pick up a print, it can be going to a networking meeting, anything, any business related drive. So with your bookkeeping program, most programs will actually generate the Schedule C for you. So like I was saying, when we're LLCs or sole proprietors, it's our tax return that we would have to do no matter whether we owned a business or not. There's just a section of it called the Schedule C, which asks about profit or loss from a business. And that's the business section, basically. So this is what it actually looks like. I know nowadays not a lot of us even see it because it's all digital or just our accountant does it. This is what the Schedule C looks like. And this section right here, it asks about income. Like I said, it only cares about general income and 1099 income. And then this is where the expenses come in. So what I really tried to pay attention to with my little cheat sheet was making my categories, things, what I call my categories in my bookkeeping program, line up with what the IRS asks. So you might have a category for gifts, education, this, that, but you want to make sure it's easily laid out, that it lines up with the ones they ask about. Okay, so I've talked about it a couple of times now, a 1099. Do you guys know what that is? Yeah. This is the 1099 time of year, January. So are you familiar with contractors versus employees? Yeah. So I guess it's different for every industry, but for weddings, second shooting is a big one where we don't have a full-time employee that's our second shooter. Some people do, but usually it's like a contractor, like a freelance basis where we'll say, hey, are you available this date to work for me for these hours? Just shoot, hand over your stuff, and go home. That would be a contractor. Things like an intern. Interns are a little iffy because if they work, I won't get into that. That's another topic. But it has to be like flexible and case by case. So an assistant, intern, second shooter, things like that. Even sometimes like a graphic designer you work with. If you have paid, so it works both ways. If you have paid any of your assistants at least $600 within that past year, so 2019, you have to write a 1099 miscellaneous for them. So this is a separate form, separate from the tax return. It happens first, so it happens now actually. Throughout the month of January, if you've done any second shooting, you've probably received these in the mail. Basically, it's just declaring to the IRS, I paid this person this amount throughout this year. So you file one copy with the IRS and you send one to your second shooter. And then same thing happens reverse. If you second shot, you should receive one if you made at least $600. Some people are just very organized with their paperwork and they'll send you one even if you only made $400. That's fine. You can over-report. The IRS doesn't mind that. But sometimes I've had instances where I've second shot for someone for over $600 and they didn't send me one. And I am a totally by the book, like goody two-shoes. I like to do everything the right way. So I spent a lot of time researching, do I get in trouble? Like, what do I do if I didn't receive one? It's their responsibility to report it. So if you didn't get one and it was over $600, don't worry, it's not on your shoulders. You would just put this as general income. You wouldn't report it as 1099 income. So you wouldn't get in trouble. Okay, so do any of you file your own taxes with something like TurboTax or those softwares? Awesome. Cool? No? Couple. Handful, yeah. Yeah, it is a little scary. So what I would say is we're lucky. I know you guys are different. How many of you are wedding photographers or wedding industry? Cool. What are the rest of you? I'm kind of curious. What type of industry, what type of business?
Hair.
Hair? Okay. Kind of similar probably.
But I work with a lot of weddings.
Yeah. Anybody else like a...
I own a travel agency.
Okay, cool. So kind of service-based, and you...
Sales consultant.
I was going to say sales, I would say, is the most different because you guys have products and inventory. So if you're a photographer or something similar, we're actually really lucky because most of us are single owner LLCs. It's just us in our business. Usually we're service-based, so not so much product, more service, so we don't have to worry about inventory and sales tax, well, sometimes, but it's a lot simpler, and usually we don't have employees, so we don't have to worry about that kind of stuff. So if you are a wedding photographer or something simple, it is not that hard to file your taxes, especially if you do your own bookkeeping and you're proactive and just categorize correctly. It's actually a lot easier than you'd think. And programs like TurboTax, they just ask you everything in a prompt form. So they don't show you that big, scary document and say, okay, go ahead, fill it out. They say, did you work for someone for over 600? You click yes or no, and then it'll move on. So it's not too scary. Some people are like, yay, I'm a photographer. Oh yeah, and I run a business. I love the business side of things. Like I nerd out about everything. Like, yeah, I have to do my taxes, but I go crazy with it. I create checklists and little cheat sheets. So I can only handle one business. I can't, well, technically 3 businesses. That's my cap. Okay, so we talked about transportation. It'll ask you to fill all that out. And then it'll ask you, so be careful when you're filling out your taxes not to double report things. So this, I made a mistake my first year. Luckily, I caught it. In the beginning, usually they'll ask you about forms. So W-2 if you work a regular salary job, and then 1099s for any second shooting. And I put in the 1099 income that I got because I did second shooting. And then under my general income, I did the sum of all my income. So I kind of double reported. Luckily, I caught it. I was like, that doesn't seem right. And that's why I love my bookkeeping program, because it generates a Schedule C. I don't file that Schedule C, but I print it out and compare it to when I'm done in TurboTax. And I'm like, those numbers don't match. What's wrong here? So that's another added benefit of bookkeeping. So be careful not to double report. If you put something in once, don't put it in a second time. And then it'll ask you about insurance. So for business, it'll ask you non-medical insurance. So liability insurance, equipment insurance, and then all that stuff we talked about, office expenses, supplies, all that stuff. And a lot of things actually go under the other expenses category. So like I said, with income, the more subcategories you like, the more the IRS likes it because it seems more trustworthy. So under other expenses, I have a ton of things. I have client gifts. There are actually caps on that. Each year it changes. I think it's like $25 per person nowadays. So education, online, fees, stuff like that. So if you can create subcategories, do it. The IRS loves it.
What if I put my logo on my client gifts? Is that now marketing?
Advertising. Yeah. Advertising, for sure. Advertising, so I'm not an accountant. I don't really know, but I've heard from friends. I've heard from friends who are accountants or auditors or different things in that field. There are certain things, so each industry actually has a code, NAICS code or business code, where each industry kind of has like a generally accepted what seems normal.
Yeah, or what typically you spend for advertising.
Right.
You're not going to spend $50,000 in advertising.
Right.
Is bringing in $100,000.
Right.
They're going to say, wait a second, you are not running a huge show. You're running one-person show.
Right, exactly.
That's what they look at. And they look at that, and then they audit you if you have numbers skewed off.
Exactly. Right. So they use those kind of like guidelines of what's typical. If something seems really atypical, like really high in an area that it shouldn't be, it'll kind of flag it. They have like an algorithm that goes like, suspicious, audit them. Okay, so you asked about home office. So this is a big one. If this isn't even a home office, this is a separate structure. So every expense related to this, she gets to write off. But do any of you have like a home office, somewhere you work at home, or like a studio or part of your home that's a studio? That you can definitely write off. So they are picky with home office because people try to abuse that one. So again, with the whole solely for business use, that's a big, guideline that they like to use. If you have like a home office, it's your photography desk, but your kids every day use it to do their homework or whatever, they'll say like, no, that doesn't count. I mean, how are they going to prove that? That's kind of like a gray area. But basically, you want it to be solely for business use. For instance, a couple years ago, I lived in Jersey City. I had a bigger condo. Part of my living room was like an actual studio. I had lights, I had shelves, equipment, everything for like portraits and stuff. And in that same, it was like a, open concept living room. In that, I had like a couch like this or whatever. But because that was also my living room, I couldn't write off the couch. Even though I met with clients there, I had meetings there, album consultations, because I also used it as my personal living room, I couldn't write that off. So it has to be parts of your home that you only use for business. So this was my Jersey City floor plan. This was my office, only used for my, I had my binders, all my stuff there. And this was the studio area. Couldn't write this off because it was a couch. Even though clients use my bathroom, couldn't write off the bathroom because that was also personal use. Kitchen, same thing. So the way that you calculate your percentage for the home office expense is take the square footage of your whole home. Hopefully you have that somewhere or you can figure it out. And then measure the square footage of the areas that you only use for business. And then do the both totals and divide the business by the total, and then you get a percentage. So in Jersey City, just for an example, it was 22%. I felt super confident that was solely business areas. So that was a condo, so I owned. So the type of expenses you could write off the percentage of was mortgage interest, so not the principal payments, just the interest, homeowner's insurance, HOA fee, property taxes, and utilities. So 22% of those I was able to write off. If you rent, it would be similar. So it'd be your rent, renter's insurance, and utilities for that percentage. So you would take your total number of home-related expenses, those ones I just listed, multiply it by the percentage of your home, and that's the amount you can deduct. So that's like a nice, good chunk for when now that I'm renting. It's a smaller area because I don't have a whole studio, so it's only 10.7%, but it really adds up. That's, I mean, any deduction we can take, we want. So you don't want to go spending a ton of money and dropping down your profits that way, because then you're left with nothing. That's what you earn. That's your salary. But you do want, if you're going to buy something anyways, you want it to be business related so that you can write it off, because your taxes are a percentage of your profit. So the lower that number is, the less taxes you pay. It's kind of a fine line because we want lots of profit. So, and then another question they ask, which again I think it's just a flagging metric of whether you're allowed to take that deduction or not, is the percentage of time you use that space. So percentage of time you conduct business in that space versus outside of it. So for instance, for us, shooting weddings on location versus working in the office. For us, it's super simple because most of us work 9 to 5 throughout the week in our office, and we'll shoot like a couple weddings per year. So when I did my math, it worked out to be 90% in the office. So we're in the clear, we can write it off. I just did like a random average math equation. So it's like, if you do a 40-hour work week, 50 work weeks per year, that's 2,000 hours spent in the office, versus if I shoot 25 weddings a year and they're on average 9 hours, that's only 225. So that's where the 90% comes from. Okay, and then the rest of the tax return, like I said, it's filtered through your personal taxes. So they'll ask you personal questions too. Healthcare, interest, dividends, investments, retirement contributions, which are kind of like business and personal. Again, totally another topic. This could take like a whole nother hour, so I won't get into retirement, but that is a really good tax saving strategy. And retirement's important. We're all gonna have to retire at some time. The earlier you contribute and the more you contribute, the better it is. Like, you could contribute $10,000 when you're young, and you could make like crazy amount on it later, or $10,000 when you're 50 and it won't grow at all. So it's so hard. It's like, yeah, it's so easy. And it's like this magical compounding interest, the magic of it. It's hard because early on in your business, you're making the least profits. It hurts. Like, you want to keep all of it, but the earlier you contribute it, it just grows like crazy. My dad, luckily, I have a very financially savvy family. Ever since I had my first ever job, my dad said, put it all in a Roth IRA, put it all in this, and I was like, really though? But I listened to him. My parents are both happily retired right now, living the life. So I've seen the enjoyment that they get by being so frugal in the beginning. So another topic for another day. But if you are self-employed, don't think that you don't have options available to you. So I know at like a normal business, they usually will give you a Roth IRA option or 401k. You can create your own as a small business owner, and it's not that hard. E-Trade is a really good. Fidelity is also really good. If you go in or even call the 1-800 number, they're super helpful. You don't need to be intimidated by the forms. They'll help you start it up. But some really popular options for us are a SEP IRA, S-E-P IRA, or a Roth IRA, or a 401k. It's called a solo 401k when you just create one for yourself. So again, contribute to retirement if you can. And then when you submit it through TurboTax, it'll e-file it for you. So basically what it does is it takes all those questions you answered, populates it into the form, the 1040, and it'll mail it off, file it, and then you have to separately pay. It'll tell you the number you owe, and then you have to physically pay that. I think you could mail it in, or they might have like a credit card processing thing online. I use pay1040.com, just a random website. They do charge a fee if you want to pay by credit card, but it's a 1.87% fee, and I have a 2% cashback credit card. So it's usually a large number. So if you can get any percentage back on it, I highly recommend it. And then like she was mentioning earlier, it'll also tell you what state and local tax you owe. Usually it's a smaller number, but it all adds up. So the general rule of thumb, it's very hard to give a flat number because there's marginal tax rates, state and local, but the general rule of thumb is 30% set aside for taxes. And then estimated taxes. I could keep going. I'm probably gonna stop soon. You guys are like, oh, why'd we invite her? Yeah.
So the Connecticut asks me to go online every month.
Okay.
Pay off what I made. So pay taxes off of what I made. So if, let's say I make 10 grand this month, I have to go in line.
Estimated taxes, is that?
It's not estimate. It's actually
Interesting.
what I've already
Oh, sales taxes?
Sales tax.
Okay.
Sales
Yeah.
and usage.
Yeah.
Is that something that's included in all this? Or that's
So yeah, every state has different sales tax laws. This is what I would say is might be worth paying just like an hour consulting fee to an accountant to just really understand it. In New Jersey, last I checked, it was like a year and a half ago, so it might have changed. It changes all the time. Our rule for wedding, it's different for every industry, but for wedding photography, if you only, whatever product, even though it's digital products, some states are like, you know, on the line, up to date. Some states are like way back in the 90s, like haven't updated anything. Digital products are like the most confusing right now. But in New Jersey, for digital products, if it's solely given to the client digitally, so like an online gallery, you don't pay sales tax on it. If you give them a flash drive, you pay sales tax on it. And if you have a package that includes something physical, like albums are always taxed. That's physical, it just is. Flash drive, same. But if you have a package that includes an album, even though let's say the album is $1,000, the photography is $4,000, you have to charge and pay taxes on that $5,000. So that's why, at least in New Jersey, it could be different everywhere. I recommended if you're going to sell albums, sell them as a separate invoice, separate item, separate, you know, separate offering. Yeah, but it's totally different in every
What you're
state.
saying is if it's just digital, so if you're just
If it's just digital or
digital,
just
you
service,
charge your client sales tax
in New Jersey.
in New Jersey.
Yeah. So Connecticut, I don't know. Yeah.
Okay.
Yeah, it should. Everything should be online, or even like City Hall or whatever. Or even try to look for a number. I think it's the Department of Enterprise, Department of Labor. No, I don't know. You can go on the state website. You should be able to Google it. Usually the PDF is right there online, like the actual tax code. But you can call up, ask. Yeah.
So like
Yeah.
if you're doing a wedding in Connecticut, you don't have to charge the bride and the groom tax?
So if it's just well, say that again. What was the question?
So
If you
let's say if I shoot a wedding, I live in Connecticut.
Yes.
If I am shooting a wedding in New York and they live in New York, do I still charge them tax?
Well, that's a two-part question. First of all, do you have to charge tax at all on your service and product? Google it for both states. But if it's a product and you're shipping the product across state lines,
There's no, like, let's say there's no product. There's just the
well, then that's a different question. Does my state code require that I charge sales tax for a service? Usually for services, most states don't. For products, they do, but then there's the whole digital product confusion.
no?
Yeah, unless
I
you
do
do
it.
it.
And that's my thing, is most people do, because they don't want to get in trouble.
Of work that you do in the other state, because then you'll have to register your business in that state.
Yes, so that's a whole other topic too. So when you start your LLC, you're starting it in the state that your business is in. Some states will charge a foreign LLC, fee to set it up and, regular annual fee. That's if you conduct a lot of business in that other state, even though you're not located there. Again, each state has a different law, guideline. I want to say New York, it's like, so when I was in New Jersey, I shot in New York a fair amount. It was something like 10 jobs per year or something. So there's a guideline. Usually we don't have to worry about it because, we don't shoot that. I mean, if you shoot like over 100 weddings a year, maybe you start looking into these things. But typically, when you're small businesses, things are easy. But when you're huge, things get so complicated.
But you hire somebody, right?
Yes, and honestly, it's so true. And that's why I say when you're starting out or when you have more time than money, do it yourself so you really understand it. And then one day outsource it. Outsource it, but you know what they're doing and you know what information to give them and you know what information to look at when they finish it for you. So there's no shame in outsourcing, especially if things get complicated or you get super busy or you just can't afford it and you want more free time. So with estimated taxes, there's two methods. One, you can try to figure out what you owe. So using your bookkeeping program, figure out what your tax bracket is, the marginal taxes, do all that complicated math. It's around 30%, but it's never a flat 30. Or the method I love is you take 100% of what you owed last year. So whatever that final federal tax due number was, divide it by 4, pay that each quarter. And then no matter what, even if your business grows a lot the next year, you make double the profits, the IRS won't charge you a underpayment penalty. So if you don't pay estimated taxes, they'll charge you an underpayment penalty. I don't know, it's not crazy much. It's kind of like interest for not paying on time. So it's due like every quarter, a little after that quarter. I love this method. It's super simple. You really can't go wrong. The only complaint people have is that if I go by that and not what I'm actually going to owe, I'm going to still owe a difference. Which I think if you're a growing business, just always expect that you're going to owe something in April, even if you're paying estimated taxes. Yeah. And I'll do one more topic and then I'll stop. I feel like this is way too overwhelming for a Thursday morning. Thursday? Yeah.
If it was Friday, we'd have a drink in our hand.
Yes, wine next meeting. So when you're an LLC or sole proprietor, well, actually sole proprietor, you don't even have a separate account. So you just already, deposit the money into your own bank. So that's simple. But if you're an LLC and you have separate accounts, because you're supposed to, it's actually really easy to pay yourself. When I first started, I'm like, how do I do this? Paychecks and payroll, and how do I do this? It's so simple. It's called an owner's draw. You write a check from your business bank account to your personal bank account. It's so simple. You can choose whatever amounts you want. You can set it up as direct deposit if you want it, regularly, but it's super simple. And if you want to prepare for taxes so that you're never really surprised in April, have any of you guys read Profit First, the book? No? Oh my God. So he's a little crazier than me. Like I think he has like 10 categories or something that he splits stuff into. I don't follow it to a T at all, but the general concept is really smart it's kind of like the envelope system where anytime you get money, you allocate it to the right percentages. I'm not nearly as crazy, but
another business, you have how many customers here?
yeah, right. I don't have time. I think I enjoy it more when it's for myself. Yeah. It's funny, in college, I was a photography major, business minor, so I took some business classes. One of my professors, it was my favorite class, business statistics. It was called business decision making, which was like, hello, that's what I want to know. She was like, are you sure you want to be a photography major? Can you come be in my major? Because she was like the head of that program. Maybe in a next life, I'll be this. So this is kind of how I pay myself. You can choose whatever amount of money you want to pay yourself. I just arbitrarily chose $3,000 because it's not, if you do it every $100, you're going to be wasting so many physical checks. $3,000 is like a good lump sum. I don't know, just a random number I picked. And because my bank, M&T, I think, charges or requires you to have $2,500 in there if you don't want to be charged the fee. So I always, at any time, keep $2,500 in the bank. It's annoying because it sits there, doesn't get interest, doesn't grow. It's kind of like a security deposit. It just sits there. So this is how I figure out my formula when to pay myself and how to allocate it. So because I like $3,000 and my minimum is $2,500, a good rule of thumb is every time you pay yourself 60%, you put aside 30% for taxes. So if you do the math like backwards, every time I pay myself $3,000, I put $1,500 in a tax account. So I don't do this because I'm pretty good mentally about like seeing the money and knowing that, okay, this is reserved. But if you know yourself, if you know like if it's there, I'll spend it, open a separate account and just put all that tax money in there. And then if you do it right, if you do 30% and at the end of the year you end up owing around 30%, the money will always be there. It'll just always be ready for it. So you pay your estimated taxes out of that and whatever left over is due in April. So because of all that math, I won't explain the math behind it. It's fairly simple, but not for a Thursday morning after all this tax talk. Every time my account reaches, if the balance says $7,500, pay myself $3,000, set aside $1,500 for taxes. And then you won't ever go below that minimum. And you'll always have what you need for taxes.
Estimated taxes.
Yes. Yep.
Do you think it's better to do it that way or just do it at the end of the year?
Definitely estimated. 2 reasons. One, I hate just seeing my bank balance go down a huge dip in April. Like I just hate that like drop. 2, you get paid a penalty. You don't get paid a penalty if throughout the year your total either equals 90% of what you find out you actually owe. So if it's close, 90%, or if you did that method. So say in 2018 you owned $5,000 in taxes. If throughout the next year, what did I say? If in 2019, all of your estimated payments totaled $5,000, even though you owe $8,000 this year, because you paid what you owed last year, you're cool, no penalty.
I don't know if I'm doing it right now that I think of it, but
Yeah.
when you pay estimated taxes, do you pay from your business?
That's a good question.
Or your
Personal.
tracking?
Personal. So that is a little confusing.
I've been doing it wrong, but
Well, I guess it doesn't really matter, because if you think about it,
yourself.
yeah, it doesn't really matter, but technically, it should be coming from you as a person, because like I said, pass-through taxation, it's Lynn Christensen, her tax return, paying on the profit I made from this business.
Right.
But it doesn't really matter, because let's say you owe $5,000, you could have the $5,000 in your business, put it to personal, and then pay the IRS from that.
Right.
So I think technically it's from you personally, but it's not the end of the world. It just never touched your hand before it went back over.
They
just happy they got the money.
Yeah, honestly, they don't care.
They somehow don't mind.
And that's another point. So with paying yourself, let's say you made $60,000 in profit, and you paid yourself through these little checks, owner's draw. You paid yourself $40,000 that year into your personal account, and $20,000 is just sitting in the bank, you know, in your business bank account. At the end of the year, they don't care about what you paid to yourself, what's sitting. They care about the profit. So no matter what you paid to yourself and what you left in the account, they care about profit. It's a little different when you're a corporation, because then you get wages, and it's just different. Same with S Corp. S Corp is weird because it's both. You kind of split it into two. You have profit and wages.
You have subsidiaries too, so it's very complicated.
Yeah. That's why I'm like waiting. I know one day I'll have to, you know, it would be smart mathematically to be one, but right now my tax saving strategy is retirement.
Calling you. That's what I think. I'm teaching.
All right, let's see. Was that the end? I think we're almost there. Yes, we made it. All right. Any other questions on anything?
I'm just gonna call you.
Again, I should have had this disclaimer in the beginning. I am not a CPA or accountant. Technically, I guess I could be a bookkeeper because you don't need an exam to pass to call yourself that. I am just a nerdy business owner. I have no certifications.
But that's enough to sustain, you know.
Yeah.
Till we reach a stage where we kind of contact the consultant.
Yeah, if you have any questions. Also, so I have an education website. It's just my name, lynnpernilleducation.com. All of this stuff that I handed out is completely free, just freebies you can download. I do have workshops and courses. Yeah.
Back to school.
I know. I'm so jealous of, it's LINPERNILLE. And then education.com is my education website, or just lynnpernille.com is my photography and video website.